guess the picture that was just shown there is not me. My name is Joeri van Geelen. Welcome you all to this panel on investments. I'd like to give you a little bit of an introduction to the panel and sort of break the ice and then get an introduction from all the esteemed panelists here. So to give you a little bit of background, like everybody knows where Bitcoin came from, but to just emphasize that Bitcoin came from a price of around 1 cent, even less than a cent, and it spiked up to 20,000 US dollars at the beginning of 2018, not even that long ago. Ethereum at 7 cents and spiked up to $1,500. So there is money to be made here. There is companies that are building real value. There's companies that are not building anything and basically have been scamming investment communities and are not anymore in existence. So this is what we're going to cover today, a little bit more about the vision of your respective VC firms and family offices, and also a little bit of the lessons learned throughout the last few years here in the space. But we're taking this a little bit broader because not all of the representatives here on the panel are fully into blockchain, so we're going to cover it from a traditional lens and from a more blockchain-focused angle. So, Zachary, if I could start with you for a brief introduction about yourself, your fund, and sort of the vision of your fund, and then I'd like to get the rest of the speakers to follow through.
Good afternoon, Zachary Cefaratti. I'm the CEO and founder of Dalma Capital. We're an investment bank and fund manager headquartered just across the street in the DIFC. Our interest, particularly in blockchain and crypto, has been through our investment management business, principally, where we have been an accelerator and platform to some of the leading crypto funds, including Alphabit, which Saeed is a founder of and representative of. We also have been interested in and engaged in systematic strategies, including arbitrage and trend following, so purely algorithmic. Right now focusing on non-directional risk, taking advantage of volatility in the market through the arbitrage platform. We're also interested in digital security offerings. Again, through our investment banking business, we see this as having high potential impact in capital markets and introducing potential efficiency. So we've been engaged on a few advisory mandates and placement mandates on the STO or digital security offering side.
Yeah, I'm still waiting for your STO. Good afternoon, Saeed, Aldarmaki. I also have a traditional investment background. I used to work for Abu Dhabi Investment Authority for 9 years. And June last year, I left to completely focus on the blockchain industry, which I'm very, very passionate about, very excited about. Perhaps at the moment, the market's not where I want it to be, but I'm pretty confident that in the long term, we'll see some very good returns in the long term. So I got involved in the blockchain and crypto space just over 3 years ago. What with co-founding Alphabit Crypto Fund, which Dalma Capital is an investment manager of. And then I just invested in it personally as well. After a while, I started advising several blockchain companies and just became more engrossed in it. More recently, I've been on the advisory board of the MENA FinTech Association, and I'm also strategic advisor to DEX, which is a regulated crypto exchange startup based in the ADGM. We're hoping to launch in the next month or so. And yeah, I've just got a very, I love to learn about the space. I'm still learning. I'm not an expert, but you know, I have a good amount of knowledge, good network, and looking forward to share my experience and a lot of knowledge with you guys.
Yeah. My name is Danish, Rizvi. I'm the Chief Operating Officer of ASA Ventures. We're a venture capital firm over here in UAE as the headquarters. We are also present in 6 countries. My background itself, investment banker since I think 7-8 years. Before that, obviously, I have experiences in other banking silos. And over here in ASA Ventures, What we're doing is, it's a slightly different model where we not only invest into companies, but also provide the execution and operational expertise, making sure that these companies become profitable and return high yield for the investors and for ourselves. It's been 16 years since we have been doing this business. We've done 15 exits in the past and have more than 30 companies in our portfolio. So, yeah.
Fantastic, thank you so much. I'll give a quick intro about myself as well. So I'm the founder of Build Blocks Group, and apart from the enterprise panel that I'll moderate tomorrow, what is specifically relevant, I think, for this panel is that we do token economics and governance consultancy out of the US, and now expanding into Asian Pacific. So we work with Polychain and Pantera, two of the funds in the US. So pretty well tapped into the VC space there, and then hence the relevance here in the panel. I'd actually like to go a little bit back and also cover Bitcoin like as an initial use case for blockchain. So when you first heard about Bitcoin blockchain, like what was the idea that you had around it then, and how did that develop to where we are today, and how has it changed? So initial till kind of the reality check right now in 2019.
Sure. So I first became interested in and purchased Bitcoin in 2011. At the time, there were limited use cases. It was difficult to research. It meant spending a lot of time on Reddit forums and trying to figure out what was going on. But that was when I initially became interested. Suffice it to say that the Bitcoin that I purchased at the time are now owned by Tim Draper. So anyone who understands how that happened will understand where my Bitcoin were. So unfortunately, I didn't professionally get interested or reinterested in Bitcoin and crypto until we met the Alphabit team, who we saw as, we were certainly interested in the space. We'd spoken to a lot of hedge funds that wanted to launch funds in the space, but we saw a lot of them were very amateur teams. Alphabit came to us with a strong team, strong background, a very good strategy for taking advantage of the market, and we decided that we'd be interested to host them on our fund accelerator platform and provide them with the infrastructure that we provide as an asset manager. So that was the first kind of professional nexus between Dalma Capital and crypto. Since then, we've continued to remain involved in the space. Again, we are now engaged also in arbitrage and trend following strategies that are entirely algorithmic, completely bot trading, and that remains an area that is highly lucrative, but principally our directional strategies are still run by Alphabit, who continue, even in difficult times, to generate good ideas and execute on them. My view on Bitcoin, again, initially in 2011, I understood a very narrow use case. Again, I hadn't really appreciated the potential. It was usable on a few websites at the time, and we thought it was fairly interesting to toy around with, but unfortunately I did lose interest in it in 2011. Otherwise, our hedge fund would be a lot bigger than it is today. So after that, we kind of began to appreciate the capacity to engage in trustless exchanges of value that were entirely digital. And we saw that use case, we appreciated that use case extends beyond Bitcoin into potentially securities, into any asset that someone might be interested to trade or transfer in a frictionless capacity, and be able to self-custodize. So we continue to pursue that. Again, we think digital security offerings have a large potential in the future. We think that this will provide the backbone of the capital markets digital capital markets in the not too distant future. We see it as, a lot of people view it as revolutionary or disruptive, but we actually see it as just an iterative, an evolution of the transition from open outcry to electronic trading, and the next iteration being the advent of digital assets on distributed ledgers that allow participants, again, to trade without the necessity of intermediation or potentially significantly reduced intermediation. So our outlook on the space remains positive. Again, as long as crypto remains volatile, we can make money off of it as a hedge fund, and volatility doesn't seem to be going away anytime soon.
Okay, knowing that the two of you are obviously closely connected, do you have anything to share there still on top, or you kind of share the same
probably
vision?
share that I first heard about Bitcoin through one of my friends who was using it for the wrong reasons, the Silk Road days, but I never really looked into it. But then when I got into setting up the fund, then I seriously looked into it, and I was sold on it pretty early on. So.
Yeah. That's when you gave up your corporate job. Yeah,
yes.
Sounds very familiar. Maybe from your side, like as you're coming from the private equity space, so how do you look at Bitcoin, and how did that evolve till today?
I mean, as far as our perspective is concerned about Bitcoin, I think the market has to reach to a stability. Until that doesn't happen, I think blockchain itself seems to be more interesting to us. As far as its application is concerned, because as a foundational technology, there are so many things that can be done with that. And we do come across a lot of startups who are actually implementing them. And our interest lies more towards the application of blockchain into different industries. I think crypto and cryptocurrencies is something which we are holding off right now. I think once the market is stable, has reached to a maturity level, that's the time we're going to look into that.
Yeah. Yeah, that's what we're seeing as well with token economics and governance, that there are so many different use cases, and that's completely new way of thinking, the distributed way of thinking that just, by definition, takes time, right? I mean, where you see the internet taking like 10 years initially to get to like 90% adoption, in the blockchain space, this is likely to take a little bit longer because we're tackling a centralized financial system. So to that extent, I'd love to find out a little bit more when we look into the blockchain/tokenized asset space. Are there specific verticals that really stand out for you, or are you essentially agnostic, and in the blockchain space, when the use case makes sense and when a real problem is being solved, you're interested to invest potentially? Yeah.
I'd love to give a more poetic answer, but we're a hedge fund. Our mandate is to make money. We look for opportunities where we can generate profit from trading, whether it's speculative or non-speculative. Currently, we're focused on non-speculative trading, and figuring out use cases for applying crypto into securities markets. In terms of adoption use case, to your point, we still sit at a very low adoption rate. Generally, technologies follow this kind of adoption S-curve, and you see that across basically every major technology that's been mass adopted over the last century, and we expect crypto to follow that S-curve as well, although now is probably the dip in the curve that many tech adoptions see. For us, Libra and Telegram are both exciting. Particularly, we see these as on-ramps. We see this as potential to put crypto into the pockets of a lot of people who haven't experienced crypto, and giving them kind of an on-ramp and an off-ramp into the broader market where they can dabble into the other instruments, be they securities, be they Bitcoin itself, which we subscribe to the digital gold theory of what Bitcoin is. So those are use cases that or those are projects that we see as very exciting and very important for mass adoption. If Libra does manage to launch, it's putting crypto into the pockets of 2.5 billion people. That's more people than have access to any fiat currency. That's more people that have access to the US dollar. That's more people that have access to Chinese yuan than any other currency in the planet. So that alone is quite powerful. We also, in trying to understand how Bitcoin's value is derived, we see the best explanatory factor being based on Metcalfe's law, the principle that any network is as valuable, its value is proportional to the square of the number of nodes or endpoints in the network. That generally is powerful at explaining the price of Bitcoin. Again, the number of active wallets, the number of users, which is not necessarily explained by active wallets, but it's a proxy for it, generally is a good indicator of whether Bitcoin's price is rising or falling, whether that adoption is increasing or decreasing. Adoption rates are very, very low at the moment. So there is a good potential outlook if we see adoption, and we think a big driver of adoption will be, again, the on-ramps of these user networks, again, Telegram being approximately 300 million users, and Libra, Facebook being 2.5 billion users, giving more people access to these instruments than currently have access to even basic banking systems, let alone capital markets, let alone other instruments for either investment, savings, trading, whatever use case may be of interest to them that is applicable on blockchain.
Thank you, Saeed.
I personally, might be a bit controversial, but I personally don't think Libra is going to take off with the current white paper that they have, and with the current pushback from the regulator and authorities and central banks. So they've got a tough job on their hand. Let's see how they work it. Facebook's pretty smart people, and they're not where they are now for no reason, so they might surprise me. But I personally, at the moment, I don't see it happening. Telegram's had a lot of question marks recently too, so let's see how that comes out. But in terms of how we see investing in the crypto assets from Alphabet's point of view, we're mostly angel investors, so we very subjective. We like to meet the team, the founders. We look at the business model. We look at the token economics. We look at the use case of the tokens. There's so many different variables that you look at. You're always going to get more investments go wrong than right, but at the end of the day, you just hope that the ones that go right generate you more returns than the one that went wrong. So it's very high risk, high reward. We've made mistakes. We've made good bets. We've learned from our mistakes. And we're very bullish on especially Bitcoin. Definitely Bitcoin is fundamentally getting stronger by the day. Altcoins, a lot of them are dying or are dead. Some of them will come out of the woodwork. Some of them might rebound. Let's see how that goes. But I think as a technology, it's definitely a groundbreaking technology, can have profound effects on a lot of industries, but especially the capital markets. Tokenization of assets is definitely a thing that I firmly believe in, and I think the next few years will be very much used. So I think the technology's definitely got a lot of use cases, but tokenizing assets is one of the biggest use cases for it. Still very, very early stages of tokenizing assets. There's still a lot of development that needs to happen before it's widely used. But it's just a question of when and not if we see that happening.
Anything you'd like to add?
Yeah, sure. I mean, my perspective on this is because, you see, as far as blockchain is concerned, or even tokenization of assets is concerned, is something as an alternative way of getting financing, right? And we have moved from the traditional markets and the traditional ways of getting into investments. And if I have my background from investment banking, I see all these things are transitioning into the new way of doing it, which is in STOs and tokenization of assets, which is a great idea. But even in the traditional investment banking area, you always go for IPOs in a market which has more depth, right? So right now, I don't see the STO market having that depth. So until it does not reach to that stage, I think it's a difficult time for us to completely indulge in ourselves into getting STOs. I mean, we've been exploring the idea of doing STOs since last 1 year, but the challenge is always how much liquidity do we have in the market in terms of people going for the STOs. So there have been cases which have been successful, but there have been many cases who are struggling right now to raise the capital through STOs.
So,
yeah.
I mean, sorry to interject, but I think ultimately for doing an STO is not going to create market depth or interest in and of itself. And I entirely agree with you. Unfortunately, 99% of the projects that you see that are looking to do an STO are looking to do it because they're struggling or unable to raise capital by conventional methods. But as a venture capital firm, I'm sure you've engaged in secondaries transactions before.
Yeah.
Right? On traditional pre-IPO companies, and you've experienced the frictions in that process, right? It's not just about agreeing a price. It's a lot of it's not an instrument that is meant to be traded. So, ceteris paribus, if one of those companies that you were trading on the secondaries market, if it had been tradable as a token, would you not have seen that process as being less costly, less time-consuming, more efficient? Again, take the idea that tokenization is creating an STO is something in and of itself. Just think about the deals, think about the companies, and think about the ability to trade these potentially on a secondary market in a more efficient capacity. Would that not be an advantage?
No, definitely. I do see there's a great value, but what I'm saying is that we still have some time to reach to that level of having that confidence in terms of going through STOs.
100%. Unfortunately, right now, there is this kind of adverse selection bias. The companies that highly successful companies that are able to raise capital easily aren't going to take the risk of going out there and doing an STO. They can raise money conventionally. They spend a week or two shopping around Silicon Valley, speaking to firms like yourselves, and they're able to raise money privately, even if it is costly, time-consuming. There's a very poor secondaries market, and they're not necessarily interested in there being a secondary market because they want to be the only source of providing new investment.
I do agree. Actually, what happens is usually when they get failed from those sides, then they try to do the STO.
Sure.
Yeah.
And then on the other side, venture capital VC firms may be loath to be mark to market, right? I'm sure SoftBank wouldn't be very happy right now if their entire portfolio was able to be mark to market. So,
yeah.
So yeah, I think the key challenge the STOs face is convincing high-quality companies to embrace this technology, to embrace this form of running an offering, and otherwise it kind of remains a chicken and egg. I mean, you're saying the market needs liquidity to get deals, but the market needs good deals to get liquidity, right? So how do we bridge that gap? That's something that we've been trying to address, working with a large partner that has a significant balance sheet and has an interest in the long-term outcome of STOs and is willing to actually underwrite token offerings that are issued on their protocol. Because again, they run one of the major protocols out there. Several of the different protocol issuers are actually now seeing this as a potential to actually get adoption, get use cases. To these altcoins that are otherwise dying need to show people that their blockchains are useful for something, and that's where we're actually seeing good interest in the market, is getting these guys to underwrite good deals to convince issuers to come to the market that wouldn't otherwise. Because again, when I sit with an issuer, when I sit with a client who, we're an investment bank, we speak to clients all the time, they say, well, should we do bond offering? Should we do an equity offering? Should we do pref? Should we do, an STO? And then the guys who have really good deals, it's difficult to convince to do an STO unless I already have an investor in the bag who I say, if I guarantee you'll get X amount of capital from this investor as long as you do an STO. So that's kind of been our approach to trying to resolve this chicken egg and get quality deals onto blockchain that people will want to buy and want to trade, to have that liquidity to bring better quality deals onto the market and hopefully create a virtuous cycle.
No,
I think Dalma Capital should do an STO.
Yeah. I think you're hitting the nail, Zachary. Like in terms of STOs, what you're seeing is that STOs work for companies that are already generating revenues, have several verticals through which revenue is coming in.
Yeah.
So a lot of the startups that are trying to raise funds right now and considering STOs, they run against the wall because looking at it from a legal point of view, it's extremely expensive to set up an STO because you need an investment prospectus in every single jurisdiction that you want to offer your product to. So what I'm seeing a lot is that the startups currently, like they find IEOs too expensive, they find ICOs to not anymore be working, so they're going the traditional seed funding route. And I think that's what we've seen the last 2 years. It's a narrative of we are a blockchain company, we have a crypto token, and here and there we may solve a problem on the back of a white paper, but that has changed to, okay, here's the problem. We're solving that problem partially through blockchain as part of the tech stack, right? So my next question would be, when you look at investments at this current stage, late 19, early 2020, with the Bitcoin halving coming up next year, are you investing mostly in seed equity, traditional, or are you still looking at investing in tokens at this current stage?
So our expertise has never been to invest in tokens. That's where Alphabit has some of the best expertise that we've seen in identifying projects at a very early stage, as Saeed said. So that's something that Alphabet has specialized in. Again, right now, our major focus is we see as a hedge fund, hedge funds seek to generate alpha, right? Now, according to the efficient market hypothesis, alpha doesn't exist. Alpha should be zero unless a market is inefficient, meaning that in order to generate alpha, you need to be exploiting market inefficiencies. And I don't care if it's FX, I don't care if it's equities, any hedge fund, in order to generate alpha consistently, by definition, needs to be exploiting some kind of inefficiency. Now, most capital markets are highly efficient. FX markets are extremely efficient. One of my mentors is John Taylor, who ran the largest FX hedge fund in the world. He shut down a decade ago because he said, FX market's too efficient. I can't make alpha, and I don't serve a purpose as a hedge fund if I can't generate alpha. So again, long-short equity hedge fund managers have struggled to generate alpha over the past decade because equity markets, conventional liquid equity markets, have been highly efficient. Even emerging market fund managers have difficulty really delivering alpha. So our view is crypto is a very inefficient market. It's inefficient for a lot of reasons. It is tending towards efficiency. So there are a lot of opportunities to invest in crypto where you don't need to have a view on whether Bitcoin's going to go to 250,000 or to zero. But you can take advantage of the fact that the market is inefficient. It is also a liquid market that you can trade. So that's been a key area of focus for us because, again, we don't have the capability of understanding what's going to be the next great project like Alphabet does. Alphabet's great at seeing these teams. You invest in, 1 out of 100 of these entrepreneurs or even less that they come to them. They have the capability of sitting there, spending the time with these entrepreneurs and successfully executing on these investments. That's not something that we have the capability of doing at Dalma Capital.
Getting a little bit further into the tokens then, so are you still looking at investing into tokens right now, Saeed, or is it mostly traditional equity?
So I think right now it's mostly traditional equity, but if they are going to use blockchain technology in their business model and they're looking for seed round, and then at a later stage, once they've become operational and they're generating revenues and they have enough funds to issue a token, a utility token, then we kind of put an agreement in place where we say, okay, we'll invest in the seed round, we'll get equity, and then at a later stage, if you do issue tokens, we want it at a favorable rate. So I think that's mostly what we're seeing at the moment. There are some projects that are coming to us that are doing a private token sale, so we're still looking at those. But ultimately, at the end of the day, it all boils down to what we see as the potential of the company in the next 2 to 3 years. And if we see that, yes, they have a good chance of doing well, then we'll find the deal that, whether it's tokens or equity or both, we'll look at the best option for us, and we'll negotiate, and we'll find the best deal.
And that includes hybrid models of equity and tokens,
hybrid,
right?
STOs, tokens, equity.
Yeah.
Yeah, I think on our sides, definitely we're doing through the traditional ones. We're not going through the tokens at the moment. And I agree to a lot of points which Zachary just mentioned, but it also depends what is your network of investors, right? So we're working with more than 200 at the moment which work with us, and especially they're from this region itself. And I think there's a little more awareness that needs to be given to them. They have to be a little more comfortable to actually go for it. We have offered sometimes, made the transaction in such a way that it could be a mix and match, or it could be only STOs itself, but every time we have come back with the reactions of, let's do it the way it is. So they want to stay safe. So obviously we want to go with the flow with the environment investors itself.
Yeah. No, and then, if we look at government strategies, I'm based in Singapore, and what I'm seeing in Singapore, I'm seeing in Malta, I'm seeing in different markets, this sort of 2017 focus on blockchain is sort of transitioning into AI. There's a lot of countries focusing on AI. Of course, Dubai has the paperless goal for 2021, which includes blockchain, that the papers need to be on blockchain. I'm wondering, if you look at the larger trends that are currently happening in the tech space, are you investing more into AI, IoT, or what are the trends that you're currently seeing that are going beyond and have a better value proposition than blockchain native companies right now? Maybe starting with you, Dani.
Oh, sure.
Yeah.
So obviously, the thing that we have been investing, since we started off 16 years back, blockchain wasn't there, right? So we were actually focusing more on the e-commerce side, because that was a developing time for e-commerce industry. And then we transitioned into AI-based projects. We're quite agnostic in terms of which sectors we work in, but then again, the technologies have to be driven in terms of adding value to those sectors. So we're working in a fintech, we're health tech, and sectors like this. Blockchain is something that we have not yet invested. As I mentioned initially, that we're not looking into the crypto side of it, but we're looking into the application side of it as a foundational technology itself, implemented on different areas. So basing those decisions on use cases, and we have experts who actually advise and mentor and be a partner in these transactions. Then we take our decisions on these kind of transactions.
Yeah. As a more like blockchain, crypto native fund for you, Saeed, are you seeing more and more of your investment thesis moving towards AI, IoT, or what are the trends that you're seeing and tapping into?
No, our thesis is still very much blockchain focused, but the founders and teams of startups that we're talking to, we're seeing more and more of them, not just focusing on blockchain, but trying to utilize AI and trying to utilize IoT and machine learning, big data. So they're trying to utilize as much of these new technologies as possible, but at the end of the day, they can use these sexy words, but if it doesn't fit in with their business model, then it's not going to incentivize us to invest in them more. So we still have to look at the business model, and if blockchain and AI works for the business model, then that's great. If not, then that's no bonus for them. So, but we're seeing them trying to fit in other technologies along with blockchain more recently.
Okay. Anything you can still add, or Alphabit is your partner here? Huh?
Investing in tech is not an area of expertise for us. Again, I don't have the. I feel that tech is still in a bit of a bubble, and I think that bubble may be running into issues with what's happening with SoftBank. If SoftBank is unable to continue to raise capital, I don't see what is going to continue to hoover up valuations. Again, we've had a lot of tech companies come to us, and the problem that we've had that's kept us away from it are that we don't understand the valuations that these companies are trying to justify, and I'm not smart enough to figure out how to make money off companies that are losing it hand over fist. So some people, again, have demonstrated excellent expertise in being able to identify these companies, but for us, the valuations are something that we struggle to wrap our heads around.
Yeah. Okay, and then obviously I know that you have open-ended funds, right? So you're still accepting LPs. When you look at an investment horizon, investing in a blockchain crypto company, are you looking at like 5 years, 10 years horizon for that to really return, or is that very cyclical and dependent on bull-bear cycle within the cryptocurrency space? I mean, maybe Saeed, I think that would be the best question for you.
Yeah, we do look at the market cycle and the market situation before assessing any project. But if it's more token focused, then I think 2 to 3 years in the token space is pretty much medium to long term. So we like to give the startups a chance to mature and try to generate revenue. So I think 2 to 3 years if there's tokens involved. If there's equity, then at least 5 years. But then again, some projects, if they hit a certain target price very much earlier than we thought, maybe because of the market cycle, then we'll liquidate. But if it's a bad market cycle, then we'll try to hold for when the situation's better. But it's a different variables that we look at. But yeah, I mean, if it's tokens, 2 to 3 years. If it's equity, 5 to 10 years, and other factors are involved as well.
Maybe also out of personal interest, because a lot of blockchain companies are now setting up shop. They're coming to us and say, "Can you help us with fundraising?" Right? And I'm kind of curious to find out, like what would you advise if you are like an owner, a founder of a crypto startup, a blockchain startup right now? What are the do's and don'ts? Because you must see a pattern of like companies coming to you, and you're like, okay, well, you're out of the door straight away, right? So what are the do's and the don'ts that you've kind of came to agreement with your GPs over time in the space?
Yeah, I think from advising startups as well, I've seen a lot of startups fall into a lot of traps and not being well prepared for the actual crypto element of their business. So I think one of the major problems that I've seen is that as a business model, as a team, they understand their business model, they understand the market, but then when it comes to looking after their token with liquidity and pricing of their token, they don't budget anything towards that, and they completely ignore that. So that's why a lot of them have failed. But in terms of do's and don'ts, I think if you are a startup in general, not just blockchain or crypto, if you are a startup, you need to be able to show that you have some skin in the game at first, and also show that you have something that is of interest or of value, no matter, even if it's a small MVP or if you have 5 or 10 customers, that's good enough. But if you're just purely coming in and you say, oh, I have an idea, I don't know how I'm going to execute the idea, I don't have any customers, I don't have something or a prototype or a demo for you, then obviously you're not going to get any money. But I think trying to bootstrap your startup is also, which is what I meant by skin in the game. If you're bootstrapping your project to get to a certain level and then you have something to show for it, then I think you have a better chance of raising funds as well. But yeah, you probably would be better off also trying to get somebody who's professional at raising funds and has a good network as well. That helps a lot. But yeah, there's many things that you have to look at. But those are some of the do's and don'ts that I see.
Yeah, I think
for yourself, yeah.
Sure. So I think on the first question that you asked on the time horizon, I mean, definitely we look at a time horizon of normal startups with the more developed technologies is around 3 years. plus minus. But then again, when you're talking about blockchain, it's a longer time horizon because there's a lot of research and development has to be done. There are a lot of loopholes as a technology they have to actually sort out. So yeah, 5 to 7 years on that side. As far as the advice to the startups is concerned, I think the same principles which apply on the startup side, on the usual technologies, I think the same applies for the blockchain as well. There's nothing different. I think the timing has to be right. The founders have to be confident about it. The business model has worked very well. There has to be an MVP. They should be knowing what exactly doing. And getting the right people on board, apart from just the startups, the founders being egoistic about their own idea, I think it's more important that they have very good experts as advisors and mentors to take them forward. The best way is open your doors to have more people to advise you to make your product solid before you go out in the market to actually raise the capital.
Yeah. No, I'm hearing a sense of a reality check here that the times of the white paper and adding advisors to your white paper and therewith raising capital on the back of no fundamental value, that these days are over. The wild, wild west is over. So yeah, really focus on building out your product, showing that traction, showing the user base growing, and then get out to raise capital, right? Maybe, but I'm hearing a lot as well, and you just need to switch on CNN or whichever Al Jazeera, like whichever news server you're following. The recession is coming, right? Like maybe money drying up. Is this something that you guys are seeing as well, and would that withhold you from taking the more asymmetrical, risky bet into industries that are still so nascent, like blockchain and crypto? And maybe starting with you, Danish, because you've not invested in blockchain yet, would that recession have a downward sort of pressure on the interest of picking up such an investment?
No, I don't think so from my point, because whenever you're doing this, because background comes from investment banking, obviously you have different buckets when you have investors for risky assets and for less risky assets. So there's always a space where they are putting aside those liquidity in terms of investing into those startups which they see that there might be a potential upside at a longer term, right? And on the shorter term, they're very much covered. And they're now actually, even on the VC side, we work on models where we actually even hedging the risk on these startup investments, which was never there before. New models are coming up. I think it's also giving confidence to the investors. I do believe there's a recession coming up. But then again, I think people are already ready for it. Who are not, they should get ready for that as well.
Yeah, I kind of agree. I think the smart money is in cash at the moment, and they're waiting for the right opportunities. They'll know that if there's startups raising, they'll be desperate for the cash, so they'll get good deals. And yeah, as a risky type of investment, you're more open to investing in a risky asset. So even if there's a recession, you kind of try to ignore that and just focus on the fundamentals of what's being offered, and there's still opportunities there, and there's still money out there to be raised.
Yeah, we share the view that crypto is very much a risk-on asset. When markets are buying risk, crypto does well. When markets are selling risk, crypto tends to do poorly. So, but there is a decent argument to be made that in a kind of Six Sigma event where there's a lack of confidence in the financial system, that could increase demand for Bitcoin and crypto. And we actually have seen it, right? We've seen it happen in countries where capital controls are suddenly imposed, or where banks are drawing up liquidity. You see this kind of panic buying of any asset that can be moved out of the country efficiently, and Bitcoin happens to be one of them. So there is an argument to be made that if there's a lack of confidence in the entire financial system, that there will be an uptick in demand. But I think that means that Bitcoin and crypto are negatively are effectively negatively correlated to risk, meaning risk on causes them to sell off, except in kind of one of these Six Sigma, very unlikely events where correlation could potentially reverse.
The time is still ticking. I see 50. I thought it was the emergency signal of we're kind of done here. But then maybe, I think I'll just wrap up the panel here. I'd like to thank all of you for your deep insights here, and I'd love to, for all of you to still be available for a few minutes if people have questions, because the panel format didn't lend itself for questions from the audience at this iteration. So if you'd still be around for a few minutes, that'd be great. And I'd like to get a big applause for the panelists today. Thank you.